Pacific Northwest region in particular is a global center for softwood conifer production. It is a low-risk biological asset and a very established business model. Everybody needs wood. It's a basic human need. And that's at the center of the investment thesis. But more interestingly, today, investment in these sustainable strategies can now directly address climate change, rural economic development, as well as preserve ecosystems. And it's that combination that really has created a lot of compelling interest amongst investors. Forestry is an established asset class of institutional quality. Investors, mainly pension funds, actually paved the way investing in this asset class in the early 1980s, and really as a function or product of changes in the tax code and divestment of forest land by vertically integrated forest product companies. That really created the opportunity to invest in land as an asset on its own. There's a long track record and a history of returns through business cycles. The forestry sector has performed well with low volatility since the 1980s through a number of different business cycles. And there's a benchmark called the Neck Reef Timberland Index that really captures return history and provides context for investors looking for the return risk profile of the asset class. And of course, something else that you are considering as managers of endowments and managers of funds is there a deep bench or universe of managers? And there certainly is. What has been interesting is over the last decade or so, there's been an emergence of a niche within the forest land sector, which has become quite mature over the decades. And this particular niche is in sustainable forestry, where managers are really changing their approach towards value creation from the asset and driving up performance. New drivers in demand in green building, for ecosystem services, for clean air, for increased carbon sequestration are creating opportunities for landowners to monetize their asset in different ways. And that is really driving interest in sustainable forestry. In fact, Cambridge Associates and the GIN, which is the Global Impact Investing Network, commissioned a report that compared the returns of sustainable investment strategies in the timberland sector with their conventional peers. And that report, which I'm happy to share with you later on, showed that the top quartile of impact investment funds can generate net returns of 8.6% compared to 4.2% amongst their conventional peers. Next slide. And so it's not only that this interest in outperformance is driving an interest in the sector, it's also this very real and tangible way in which sustainable forestry strategies can address climate change that is also motivating investor interest. We know today that there's a real challenge ahead of us. Climate is set to increase 1.5 degrees between 2030 and 2052 at the current rate of emissions. And we know we need private capital at $1 trillion level in order to prevent some of the worst impacts of climate change. There are many ways in which we can address this challenge through clean technology, through improving infrastructure, but trees present a natural solution towards climate change. They absorb about 25% of human impact, and improved forestry and reforestation strategies can actually provide up to 18% of the mitigation that we need in order to keep temperatures under 1.5 degrees. And that's extremely significant. We also know that the forests right here in the US, the western temperate rainforests, are an incredibly significant carbon sink. The species that grow here in this region sequester rates of carbon higher than even tropical forests, and they do so for incredibly long periods of time. Next slide, please. And so it's not just the financial thesis and the climate thesis that that creates an interest in sustainable forestry today. Climate change is only one of the things that that strategies such as ours can address. EFM strategies deliver significant benefits to rural communities, to the climate, to drinking water, to improving biodiversity, in addition to carbon sequestration. And some of the metrics you see here represent the whole range of impacts that sustainable strategies, forestry strategies can have. Next slide. What I wanted to share with you here is the asset owner universe. Jin recently commissioned another report focused on forest land investing that described for us, and you'll see the range of investors here that have deployed capital into sustainable impact funds. You'll see pension funds leading the way, which isn't surprising given that they were one of the earliest actors and investors in the asset class. But you will see quickly following their lead are family offices, endowments, and foundations. We also found that a majority of those investors are located in North America and Europe. Next slide. So stepping back a little bit, I'd like to talk to you about the investment thesis for forest land in general. Investors like pension funds really view timber as a portfolio diversifier. It has low correlation with most other asset classes. There's a history of timberland acting as an inflation hedge in portfolios. And really what drives that is the fact that timber is a biological asset. When you leave trees alone with free inputs like water, sunshine, and soil, trees grow, sometimes 4 to 8% a year. And that biological value can be stored on the stump. Unlike farming, you have an asset that doesn't go bad, an inventory that doesn't really depreciate and continues to grow and put on value if you just leave it standing. So you can time your harvests to meet good and favorable markets. And you can ride out recessions if you don't have debt, and that creates an incredibly sticky asset. So, for example, in the last recession, where you had log prices being volatile, timberland owners, experienced about a 10 or less than 15% volatility in their portfolios. The Pacific Northwest, or the western region of the United States, where we focus, is also incredibly unique. It has some of the highest concentration of high site or high productivity lands globally. You have commercially valuable species like Douglas fir, spruce, and hemlock. And these are also naturally occurring species, so you don't have the intensive inputs that you need like you do in plantation forestry. You also have access to mills, an amazing infrastructure up and down the West Coast, and access to both domestic markets like Seattle, San Francisco, and other regional markets, but also markets across the Pacific in Korea, Japan, and China. Next slide. So how do investors actually realize returns from this asset class? What you see here is a comparative bar chart. On the right is a bar that represents the way returns are realized through traditional forest land strategies. Primarily, you'll see in light green timber, which is current income from harvesting logs and selling your logs to mills, or capital appreciation, which is essentially the growth in value of your forest over time, really driven by biological growth, which you can capture or monetize on exit. On the left, you'll see a representative sustainable forestry strategy. In this case, this is how EFM describes the value that it generates over time. You'll see we might harvest less in the form of timber, but we generate a variety of other returns and diversify our revenues by selling standing trees or logs in the form of carbon offsets. We might, instead of harvesting a steep slope, implement or sell a conservation easement that protects the habitat value of the trees in that landscape. And as a result, we also have higher capital appreciation because we leave trees standing on the ground for longer periods of time and they mature into more valuable age classes. In addition, this strategy unlocks the access to low-cost debt and tax capital motivated by the impact returns around job creation and around environmental impact. And so put together, you have a more diverse set of revenue streams and economic drivers. Next slide. So putting all of that together, I want to spend a moment here on EFM's investment strategy and then segue into a sample transaction. What we do as an investment manager is to really identify unique properties. So we're looking for properties that have all of the conventional characteristics of timberland, commercial timberland, like good infrastructure, good access to mills, good roads, fundamentally sound inventory. But in addition to all those standard things you would look for as a timber investor, we are also looking at important landscape scale characteristics. We're looking for forests that have incredible social or environmental attributes. They may be in the drinking watersheds of local communities. They could be habitat for endangered species. And you'll see in the next example, it could be the site of a community forest. So we're looking for this great combination of fundamentally sound timberland, but also really unique attributes that we then, during our hold period, can monetize. We do so in the ways that I described, through harvesting trees using our sustainable FSC-certified strategy, by diversifying revenues, by the sale of conservation easements, sale of carbon offsets, and non-timber forest products. And then finally, very importantly, we're interested in long-term impact. We're interested in driving climate change mitigation. And so we need to be careful about what happens to our assets on exit. And so EFM works hard to transition our properties to long-term landowners, entities like land trusts or government or state agencies that may be able to continue our approach to sustainable forestry. So let's put this all together for you by talking about a transaction that we completed in our second fund. Eric will go over the details of Chimicum and where it falls within the landscape. But Chimicum Ridge is a 800-acre parcel located on the Olympic Peninsula. And it was really interesting to us because it occupies a very unique niche within the landscape. It's surrounded by organic farming. It's in a community that really values local economic value creation. And this particular forest was slated to be harvested. It was owned by a commercial forest land company that wanted to monetize the asset by harvesting almost the entire asset over a couple of years for timber. It has a very attractive species mix of Douglas fir on gentle rolling slopes that you can see here. That was the slated future for this particular property. EFM was approached by Jefferson Land Trust and Trust for Public Land to see if we could step in as an interim landowner and hold the asset for 5 to 7 years while Jefferson Land Trust and the local community could put together a funding package and to raise capital while EFM was able to hold it and prevent the harvest of the entire property. So when we looked at this, what really drew us to this property and what made it a compelling investment was the fact that it had a really fundamentally sound timber asset. But in addition, we were able to monetize some of the other important values. We generated $1.5 million with the sale of tax credits generated via accessing the New Market Tax Credit Program, which we can talk about in greater detail if that's of interest. But most importantly, we were able to sell a development easement to the U.S. Navy within 2 years of owning the asset. And that's of interest because the U.S. Navy, which has a base in the area, wanted to prevent rural real estate development within and around its bases. So that conservation easement brought some nice cash flow into the fund and allowed us to be patient owners. while we developed with Jefferson Land Trust a agreement, a long-term purchase and sale agreement, as well as recently we just closed a working forest conservation easement as well. And so this range of revenues, from tax credits to development easements to working forest conservation easements, along with some FSC prescribed commercial thinning, has allowed us to generate revenues in ways that other landowners would not, and given us given Jefferson Land Trust a runway to potentially acquiring the property from us over the next couple of years. So with that, I think I'd like to hand over to Eric Kingfisher, who will describe this relationship and this project in greater detail.
Great, thanks, Amrita. Hi, everyone. Thanks for being on the call and the webinar today. My name's Eric, again, Eric Kingfisher. I'm over here at Jefferson Land Trust. I'm up in Port Townsend, Washington, and just quickly about me, I've been with land trusts for about 15, 16 years, working a lot with the Washington Association of Land Trusts, working with Jefferson Land Trust, other land trusts in the Northwest for quite some time. Next slide, please. Jefferson Land Trust is this outlined in green, highlighted in green there. We're up there on the Olympic Peninsula. We mostly work in East Jefferson County, and as a land trust, we've been around since about 1989. Our mission is to help the community preserve open space, working lands, habitat forever. We're an accredited land trust. There's an accreditation commission, Land Trust Accreditation Commission, that verifies that we work in the highest standards and practices for private land conservation in the nation. We've got about 8 or 9 full-time equivalent staff, volunteer board of directors, about 10 people, and a budget of around $800,000 or so. We hold 61 conservation easements. We own 24 different properties, and over the course of our 30 years, we've helped protect about 17,000 acres in Jefferson County. Next slide. In red there is where Chimacum Ridge Forest is, the case we're going to be talking about, and you can see Seattle there in the sort of lower right. So just as far as regional context and a locator, that's where we're at. That's what we're talking about. Next slide. And before we jump too far into the Chimacum Ridge story, I just want to give you some context about how land trusts work, if you don't know. So land trusts, about 1,500 land trusts or so in this country. And how do we typically do this? So we're in the business of permanent land conservation. We are very focused on the concept of perpetuity and helping our communities preserve important places out there that are around us that will be servicing future generations in a variety of different ways. And we do this in a few different ways. We acquire properties, people donate us properties, we buy properties. We also hold conservation easements, which are permanent deed restrictions effectively. People donate those to us. We also acquire those and purchase those. How we come about that is we have a conservation planning process. We identify properties that we determine will help us fulfill our mission of helping the community preserve open space, working lands, and habitat forever. And so we actively pursue properties for conservation. We also respond to conservation opportunities that come in the door. And funding for projects, like project opportunities, come from a whole variety of sources. We've been, like I said, doing this for about 30 years, and it comes in a lot of different shapes and sizes. But generally, people are going to donate properties to us. So there's this value that's being donated, or donate conservation easements. That's one way we do this kind of stuff. We also do a lot of local fundraising. People around us, the community, helps us keep the doors open, and also contributes to some of the real estate value of the actual acquisitions that we have. We also have some local county funding. There's a local county conservation funding program, generates a couple $100,000 a year we compete for. There's state conservation funding programs that we compete for. And then there's federal conservation funding programs that we also compete for, which are highly competitive. And of course, our private philanthropy partners and our foundation partners have been really instrumental in helping us fulfill our mission as well in all these different ways. And any individual project can take anywhere from a few months to 6 or 7 years. And it all depends on the funding, the landowner, the land trust capacity, what the right timeline is. Sometimes it's a rush, and sometimes it can take time depending on how many different sources of funding we're looking for, et cetera. But again, it just kind of depends. Next slide. So all this stuff takes partnership. All this stuff takes collaboration and partnership. And there's never been a conservation project done in the history of the world, I don't think, that has a collaboration. And our partnership with EFM has been really instrumental in this particular project. So I put this slide up just to show a little bit more about where we work and what we do. This is sort of an oblique view. The white area, the stuff outlined in white, is places that we hold real estate interest in the form of conservation easements or what properties we own. And the blue outline is Chimicum Creek watershed boundary. So the Chimicum Creek watershed area. You can see how Chimicum Ridge is a pretty integral part of that watershed and its ecological and scenic values. And we're looking at our conservation planning efforts. This is about 10 years ago. We identified that immediately as a really important property because of the threat of subdivision and development, and also recognize its opportunity because it was owned by a single entity, and its significance in the watershed that we were working really hard on was very apparent, and we had this vision of it being potentially a long-term community forest. Now, we've been, for 30 years, been working in this watershed, mostly on habitat conservation and farmland conservation, and this is a critical piece of the whole integrated watershed, and this focus our attention on it. So a real short version of the story that brought us to EFM is that we jumped on it and we said, okay, this is a really important property. Let's talk to the landowner. Landowner was an industrial timberland owner, and fortunately had a conservation program. They said, oh yeah, you're interested in this? That's okay. Yeah, we'd like to work with you. And so we went down all the traditional avenues that I just outlined before, all those federal programs, all those state programs, all those other local programs, trying to find enough funding, all those millions of dollars to come together to acquire this property for local ownership and to manage this community forest. And we spent 4 years working that out. And there just is not, or at the time, there was not a lot of funding or programs out there that were focused on working forest land conservation. So we kept striking out, and it was getting to basically be down to the wire where the landowner was really ready to move on, and they started their clear cutting process. And right at that time, Trust for Public Land had been working with EFM on some forest land conservation projects in the area, and that brought their attention all up to this project, and it became a really good fit, as you heard from Amrita, as a EFM strategic acquisition, as a bridge owner, which was a really good fit for us. Like I said, all the traditional avenues really weren't working for our conservation strategy, which was really important to our overall conservation intentions here. And to have EFM come in as bridge owner really helps us give us the time and that otherwise powerful collaboration that's really necessary to achieve a conservation project of this size for our scale of community effort. Next slide, please. So as you heard from Amrita, at that time of acquisition, we established a purchase and sale agreement. And what she indicated is, again, that what this does, it gives EFM some security in their eventual takeout. They know they have a partner in the eventual exit of the property. And for us as a land trust, we've been putting a lot of energy in to the eventual acquisition of this and the fundraising and all the steps we're taking to establish permanent conservation and protection and stewardship of this place. And so that gives us a foothold too. It says, okay, well, we know we'll have rights to acquire that when the time comes and the time is right, and we've got the funding lined up. And right now that 7-year purchase sale agreement has a 2023 kind of horizon. And that what we acquire it for will be determined by a third-party appraiser, and it'll just be purchased at the appraised value at the time. So in the meantime, like you heard, there have been 2 easements that restricting rights on property that have been purchased by the public, and that's helped service some of the EFM investment goals, and also bringing down some of the value of the property that makes that much more available and accessible to us for eventual acquisition and then management, eventually as a community forest. And just briefly, I think it's important to just recognize that there's a lot of on the ground work going on here, and there's a lot of excitement and energy around this very on the ground. The reality of this being a permanent protected community forest is exciting. It's a vision that's really resonating with our community, with everything from our adjacent landowners, our partners, and the elected officials are excited about this concept. There's a lot of work going on in there, and that's what helped our state say, okay, yes, we'd like to allocate some funding for this working forest land conservation easement that essentially helps us have a demonstration of what responsible ecological forest management can look like and how that benefits the local community in a variety of different ways. And I think it's a real success story to see the state invest in that way. So the next slide. Next slide, please. And next slide. There we go. Great. Okay, sorry, just if you could go back one more. The community forest vision for this property, I think, is important too. So I think our intention and trajectory is to purchase property from EFM, as I mentioned, in 2023. We're building local support and cultural awareness around the public benefits of having well-managed working forests as part of our land base. And we're also helping lead a regional effort for more public investment in establishing more community forests in the Northwest. And what we mean by community forestry is really a forest that local communities have an authentic involvement in the management decisions around, and that they benefit from its management. So in our case, we're envisioning a forest that's selectively harvested in perpetuity. It's staying a forest and being selectively managed. It's providing timber and non-timber forest products that are accessible to the local community. And the local economic benefits of that sustainable production supports local priorities and further forest land conservation. You know, we envision a forest that includes trail networks for recreation. You know, it becomes more of a classroom for forest management education and forest ecology education. And in the meantime, we've also secured and acquired the adjacent 65 acres of this 853-acre property, which will function as a gateway for the public from a public road to the Chimica Ridge Community Forest, and anticipate launching a capital campaign soon to help support our acquisition of the 853-acre Chimica Ridge property. Next slide. Great. This project, like I said, has really generated a lot of support. We have a lot of support throughout our community around this vision, including from our local boat building businesses and schools, our home builders, other craftsmen that would love to have a local source of wood and help tell that story of sustainably managed forests and the products that they're producing. And they want to be around forever. We want these forests to be around forever and provide not only those timber benefits, but all those other benefits, ecological benefits and social benefits. And we also, like I mentioned, have a lot of support for our local elected officials, recreationists, wildlife watchers, surrounding farmers, salmon recovery movement. You know, this property and this vision is so integrated with the healthy watershed intentions of our land trust and our community that we just really can't imagine it not being a successful acquisition and endeavor over time. And with that, I guess I'll turn it over to Sarah.
Great. Thank you very much. I'm happy to be here. My name is Sarah Cleveland. I am a board member of the Russell Family Foundation, as well as chairing their investment and audit committee, and also work as an independent consultant in the area of investor readiness, helping families and family foundations prepare to implement impact investing programs. And last but not least, I'm also a member of the IEN Fiduciary Duty and Policy Working Group. So next slide there. Thank you. The Russell Family Foundation, this is to give you a snapshot. What I'm going to be talking about from the investor perspective is where an investment like EFM fits in our portfolio. And I would just want to give some context to the Russell Family Foundation. That way back 20 years ago, they were started with the proceeds from the sale of the Russell Company, Frank Russell Company Investment Company. And with roughly 140 million, we've given away, or around 130 million, we're around 142, 143 million today, and have given an equal amount away over that 20-year period. We're located in Gig Harbor, Washington. And environmental sustainability is a core value and the core mission for the Russell family, including being active in their community and location. So they are very focused on place-based investing and also grassroots leadership. So there are many reasons that investors will include real assets like forestry, and divestment is one of them. In the 2012, when Bill McKibben was doing the do the math tour in the Pacific Northwest. There was a Russell family member who attended that and came back to the board and said, this is something that I think that we really need to look at, is a fossil fuel exposure portfolio. And they were very thoughtful in the process of doing that and decided to divest from first the filthy 15 and then have taken steps since then to look at other, not just the equity, but also the fixed income assets in the portfolio. So that's been active since 2012, 2013. In 2014, they became a founding member of the DivestInvest Philanthropy initiative that has just completed 5 years, and they've just released a report on the activity there. And I believe they've now have over 200 participants and 24 billion in assets. We have also published an overview of the impact investing journey for the foundation, and it's available on the web. That was published in late 2018. We are also going to be sending that around with the slides within the next few days. But you're going to find that available on the web, and many of the slides that I'm including, I just have 3 or 4, will be in there as well. So next slide. Looking at portfolio construction, this is just one of the lenses that we look at in our portfolio, is what are the role of the assets. So the lower risk stable assets for the operating budget, you want to make sure you can pay your grants, etc. We have roughly 20 to 30% in there. And then looking at growth and perpetuity, now Russell Family Foundation is in perpetuity at this point in time, but there's nothing that requires us to be. And we have public and private investments here, roughly 60 to 70% of the portfolio. And we have a target of 15% to private equity, and we're currently about 9%. And the last but not least is aspirational impact. We have a 5% bucket that we're growing over time, that we want to be very catalytic and take more risk. And much of this happens in the play space, just local, close to home. Next slide, please. So this is just taking that same lens and looking at what's in each of these buckets. It's a bit busy, but I've circled the sustainable real assets there so that you can see right where EFM fits. We have 2 investments with EFM, 2 different vintage years, and we put in both in Fund 2 and in Fund 3, $1 million each. But we have also other sustainable real assets type focuses in terms of water, energy efficiency, etc. And you can see that we also have impact private equity and venture capital, and the ESG public equity and custom screens, as well as the private debt and direct lending. So this is really the core in terms of where our impact is happening in the portfolio. Could we go to the next slide, please? This is what I really wanted to focus on, get a sense of why EFM. EFM fits into our thematic bucket and place-based. So we see that as a very highly aligned with our mission type of investment. And we've got roughly 82% of our portfolio fits in one of these buckets, is aligned in some way, shape, or form. And in the thematic place-based, we have about 9% with EFM, renewable energy, clean tech, wastewater, and some multi-thematic funds. The bulk of our portfolio, as I mentioned, is in that the level 3, which is the ESG integration. And that's primarily in screening, both in positive and negative, or the ESG integration and fixed income and equity. Included there, that's the lower level, is the values aligned negative screening, and then values aligned positive screening. We also have that. And then roughly 18% of the portfolio is not aligned. But we are long-term patient investors, and we, as I mentioned, do currently invest for perpetuity. we can be that patient capital for EFM, and which provides us really low correlation to many of our other investments, as Amrita and Eric have also talked about, the inflation hedge and also the lower volatility. In addition, many investors are starting to use the UN Sustainable Development Goals as another lens in terms of their portfolio, and that was another thing that EFM fit into very well. There are four they're aligned on the different UN SDGs, Sustainable Development Goals: lifelong land, the climate action, and responsible consumption and production. So it's been a key, also place-based, meaning Pacific Northwest type of investment for us. To the next slide, please. So this is just a snapshot of the total portfolio from that impact exposure that I just mentioned. You'll see on the left-hand side the thematic at 9% and the bulk being in that ESG integration bucket at 54%. But and that's all I have for now. So if you'd like to go to, this is again just a snapshot of our portfolio, if you'd like to go to questions.
Excellent. Thank you all. And I think you've already answered a lot of the questions that came in advance. So thank you for walking us through this whole area of investment and what it means both for the investment on the ground at the end of the day and for the investor. So I will jump into a few questions. We've got about 10 minutes to walk through some more details. So one question that just came in while we were speaking was from Susanna, who is buying EFM's carbon offsets and easements? And there were a few other questions in advance around carbon offsets, carbon credits, and in particular, if there are examples of use of carbon credits by endowments, what it would look like to set up an investment fund for carbon offset projects in the Southeast. A few questions around that. So I don't know, Amrita, if you want to take that one or others who want to jump in.
Absolutely, I can start us off. And maybe it'd be helpful to describe how carbon offsets work, just for everybody on the webinar. In the context of sustainable forestry and forest land investing, a landowner can sell a carbon offset into either a compliance market or a voluntary market. In order to generate a carbon offset, the landowner must demonstrate that he is taking on actions that are additional or in excess of what is happening in the business as usual scenario. So in the case of sustainable forestry, the business as usual scenarios are essentially a short rotation clear cutting management regime. And instead, if one were to implement a longer rotation 50 to 60 year harvest regime, it can significantly build carbon stock on the landscape and increase carbon sequestration, whereas the conventional clear cutting approach may actually deplete carbon stores over time. And hence, so carbon offsets become this monetizable opportunity that then if you can validate to a third-party standard like the voluntary carbon standard. And you could sell these offsets into a compliance market, which here in the US, the California carbon market is probably one of the largest markets globally for carbon offsets, and landowners around the US can actually sell their offsets into this market. The benefits of that are it's a compliance market with price certainty and transparency in what carbon prices are trading at into the future. And then the voluntary buyers are really buyers like largely corporations that are driven by sustainability motivations and the need to want to offset their emissions associated with their products and their supply chains. So these may be companies like Walt Disney and Lyft that have announced significant carbon purchase commitments. EFM has sold its own offsets to General Motors and has helped make the Chevy Volt a carbon neutral car. From an investor perspective, you can get exposure to carbon offsets and help instigate carbon markets in many different ways, depending on your tolerance for risk. One of the low risk ways is through indirect exposure through forest land, because forest land owners have optionality to enter into carbon offsets without taking on a direct carbon market risk. You could also very directly invest in funds that are being set up to purchase carbon offsets with the goal of selling offsets in the future, with the thesis being an increased price in the future of carbon offsets. So hopefully that addressed some of those questions. And does anyone else want to pitch in a response?
I think that's great. And so
this is Sarah. I just wanted to mention we haven't done any direct investments on carbon offsets, but I think that is a growing area for more innovative financial structures as well.
Yeah, and I guess I'll add just it's not a carbon credit situation, but the conservation easement that was acquired by the state of Washington, or was funded by the state of Washington, included as part of the conservation values to be protected or that are represented on this forest, or commercial timber and non-timber forest resource production, and also carbon sequestration values, climate change resiliency values. So those are written into the conservation easement as some of the things that, in effect, the state is investing in.
That's great. And a couple of more detailed questions around which taxes and credit incentives are available in the states that you're operating in, and about EFM's offerings, whether there are publicly traded opportunities or just private placements. Maybe we can either fold those answers in or follow up after the webinar, and also feel free for any questions that we haven't answered to send those my way after the webinar, and I can connect you with the speakers. But thought maybe we could just close with a set of questions that came in around how we grow this field. So several people asked about, what are some of the challenges in attracting investors to this work? How do we get consultants and institutions to believe in these approaches? How can endowments who do invest best tell the story of these kinds of investments, or who are looking to convince stakeholders that they need to bring along in order to make the investments? What kind of stories can they share? And what kind of tools could help shift investor behavior in this direction? So thought maybe we could do a round with each of you to reflect on that. I think we've already gotten a few great stories that participants will be able to take away, but reflecting on what it will take to make this accessible to investors and to help stakeholders within endowments make this a reality. So I don't know, maybe we could start with Sarah and go back through Eric and Amrita to close us out.
Sure. I think that one of the things that can be very helpful is that the investor really understands the purpose of the investment and how it fits in with their portfolio. Many of these are market rate investments and can be looked at in comparison to other non-values aligned types of investments. And I think that also within the world of the investment consultant universe, that's also provides more clarity and, I guess, confidence that the investments will yield an appropriate return. And that gets back to the investor clarity in terms of whether or not you're looking for market rate or you're intentionally looking for concessionary returns. We don't, at Russell Family Foundation, unless it's possibly in the catalytic category, we're not looking for concessionary returns. However, I think it's really important that philanthropic capital can be that first loss and often provide that opportunity for market rate investments to come in.
Great. Just from my perspective, I guess we were talking about this earlier when we were planning for this call, and I think the interesting scenario is this, that there's with these private equity investments, the eventual takeout is always a mix of a lot of different things, and those different things include different public funding sources, your private philanthropy that helps kind of fill that gap, and then in our case, it's transitioning to local ownership as well, to like I mentioned, have this sort of perpetual values retained forever and managed and stewarded forever on a local level. And that takes a lot of I guess that takes a lot of, I guess, community intention and community infrastructure in that way. And so what I'm getting at is that these local land conservation organizations are partner in this, and can be a partner in this in a lot of different ways, in which we're so dedicated to the health and well-being of our local watersheds, of our local land base, and thinking about our future generations of the people that are going to be living here. And that, I think, it's an important part of the equation when thinking about making this work for the very long term. And so if attendees are aware of your local land conservation organizations, whether they be a branch of the national groups like Nature Conservancy or National Trust Public Land or something like that, or even your local more watershed-based land trusts, consider them partners, and supporting them in their success and capacity is going to be part of the fabric of what makes this a successful approach to making positive change.
Great, and in that vein, I think my experience is that we really need more investors of different categories of investors to enter this asset class if we want to make it grow. Pension funds have invested in traditional forestry, but they're slow actors, and it really needs the innovation and energy from actors that can move more quickly, like family offices and private foundations and endowments, where there is another significant pool of long-term capital. And so, sustainable forest land really is a great fit for this long-term capital. And it's important that we make the case for how it fits within those portfolios. Because when compared to private equity or to real estate, sustainable forestry doesn't quite compete on a pure return basis. And so it's very important for us to also look at that other side of the equation, and the risk side, in order to carve out a place for real assets, and particularly forestry, in the asset class. And to demonstrate that it does and can compete on a risk-adjusted return basis. So I think that's something we all need to work on more with investment consultants and with industry players like IEN and the GIN, who are already doing such important work in spreading education and helping investors understand this asset class better.
Wonderful, thanks. And so we're right at time, and so I see there are more questions coming in, but happy to follow up by email after the webinar. So again, a reminder, there are lots of ways to stay engaged in this conversation. We're looking forward to continuing the conversation with all of you. I'll be sending out a recording of the webinar and additional resources that were mentioned today. So keep an eye out for that, and feel free to send any more updates, questions, topics you'd like covered my way, and we'll aim to get those covered. So thank you again to Amrita and Eric and Sarah for sharing all of your wisdom today. And thank you everyone for participating and sharing your great questions.